Hello, everyone. Good morning from our friends, and good afternoon to our colleagues from across Rwanda. I'm Magnifique Migisha. I work for Capital Market Authority, and I'm in charge of communication. I will be your moderator today. We have shared with you the agenda of today. So our conversation today will be sharing more on the Absa Africa Financial Market Index presentation, whereby we have our great speakers who will be sharing insight on this particular report. As you have seen the program we shared with you, we'll be having our CEO, Mr. Tapero Cheore, who will be delivering the opening remarks. Then we'll be having Mr. Nikhil Sangni, the Managing Director at the Economic and Monetary Policy Institute. Also, we'll be having Mr. Jeff Gable, the Chief Economist at the Absa Group. Then after this particular session, we'll be opening for your questions, your comments on this report. Then we'll be having our guest of honor, Honorable Soraya Hakuziaremye, the Deputy Governor of the National Bank of Rwanda, who will deliver the closing remarks. Without further ado, then welcome the CEO of the Capital Market Authority, Mr. Tapelo Cheore. Welcome, CEO.
Thank you, Magnifique. Good morning, everyone. Let me take this opportunity to welcome all of you to this seminar on the presentation by OMFIF and Absa on the Absa Africa Financial Markets Index. I think from the Capital Markets Authority perspective, this is some of the crucial things that we really want to be engaging the industry on, especially that, you know, as a market, we really want to try to speed up a lot of development across the capital markets in Rwanda. And some of the developments that are earmarked are generally the issues surrounding the issues surrounding the index. And the index is made up of certain attributes, which I think OMFIF and Absa will elaborate, and is some of the things that we need to be working on as a market to really uplift our capital markets development in Rwanda. As you might realize, I think we are, I think, number 17 in the whole of Africa. But I've since realized that there's a lot of potential in the market that when we can work together, I think we can be able to take this country or this market far much forward as quickly as you can. I think I'm not going to take a lot of time because my job was to basically welcome you to today's seminar, which is the start of other seminars that are going to be happening in the market. But most importantly, to appreciate and thank Economic and Monetary Policy Institute, OMFIF, Nikhil, for taking time to actually teach or to actually share the learnings from the index with us. We really appreciate, especially that you are doing this free for the Rwanda capital market. And also Jeff from Absa Group, thank you for taking time to spend with the market participants in Rwanda, because it means a lot for us in Rwanda to work towards development of the capital markets in this country. And also let me take my appreciation to Deputy Governor Soraya. I wouldn't attempt to pronounce the surname, but I'll get there as the months go on. Thank you so much for taking time and for agreeing to do the closing remarks. I think we're expecting Minister Tesi. I'm not too sure whether she has joined already, but I think she might be joining us, or she have already joined. And also Mark, the chairperson of Capital Markets Authority. But all participants, capital markets participants in Rwanda, and everybody who have joined, CMA staff, thank you, and you are welcome. I think that's all the welcome remarks from you. May I request all of us to ensure that we mute our mics and we also mute our video so that we don't disturb, because we only have a limited time with this. With all those few remarks, I think I'll go ahead and then invite Nicole and Jeff to proceed into the presentation. I thank you all. Have a good day and a good week.
Yeah, thank you very much, Tapelo. And yeah, I'm joined by my colleague, Jeff Gable from Absa, who'll be co-presenting with me over the next 40 minutes or so to go through Rwanda's score in our index. I'll leave it to Jeff to explain much more about what the index is and Rwanda's, and I'll go through Rwanda's performance within it. But that's just a very quick introduction from my side to say thank you all for joining us and for the invitation from the Capital Markets Authority from Rwanda. I'll briefly share my slides, but in the meantime, maybe Jeff, you could introduce yourself as well.
Sure. So Nicole, thank you. And to everyone joining on the call today, thank you very much for this opportunity. As introduced, my name is Jeff Gable. I'm the chief economist of the Absa group, and also been heavily involved in this project around sort of encouraging the development of African financial markets right back from when we started discussing this with our partners at OMFIF back in 2016 and ahead of our first launch in 2017. So my opportunity today is to talk a little bit around sort of the index itself and position it, tease my final comments, I'll tease a little bit sort of Rwanda's score, and then hand over to Nicole, where we'll go really into the detail and to the meat of things that are relevant for all the stakeholders that are on the call today. The first bit about this, I suppose, and the 2023 index was launched at the IMF World Bank annual meetings in October of last year. The 8th version of the index will have a similar launch towards the end of October this year. We called it the African Financial Markets Index, and one of the things that it does first and foremost, often in people's minds, is it raises the question about, where are the highest returns? Which markets did best in the last year? And I guess I want to spend the first part of my comment today just sort of disabusing that as a question. The Absa Africa Financial Markets Index isn't about where the highest returns have been. It's not about where the biggest need for capital across the continent is. It's really focused on financial market development. And we think it's really important, right? The environment where countries are best placed to be able to attract capital and to be able to put that capital to use is what will generate an environment, an economic environment, a set of opportunities, a social environment on the continent where all of us can look forward to an ever stronger tomorrow. And right from the outset, I want to highlight that the index isn't just about making things easy for foreign capital, though often I think on the continent we're guilty. When we think about capital, we immediately think about money coming from across the border. But it's about local capital as well. It's making sure that the savings that we can generate here within the continent find sort of useful purpose on the continent. It don't trickle out to find themselves in US treasuries or elsewhere. And our starting point for this, for how we think about financial market development, is that we're looking to try to encourage financial markets that are open, that are transparent, and that are accessible. And so there's a little bit of editorializing there, right? So that's going to be our starting point, and you'll see that theme we've turned to throughout today's presentation and throughout the index and its scoring. This open, transparent, and accessible, the ability to put sort of foreign money to work, to attract local money and put it to work. This was really important back when the first version of the index was launched in 2017, of course, and Rwanda was one of the 17 countries that's been with us right from the very outset. But since 2017, it's become even more important. We had COVID and all the economic scarring that took place as a consequence of that. We're in an environment right now, whilst we're looking forward to somewhat lower policy rates in some parts of the developed world, it seems highly unlikely we're going to go back to the very accommodative rates that existed for much of the previous decade. And of course, geopolitical frictions and tensions are higher now than they have been in certainly my 30 years as a professional economist. And so it's never been a more important time, I think, to focus on open and transparent and accessible markets, making it possible for money to be put to work. The contribution of the Absa African Financial Markets Index in this environment is to provide sort of cross-country information, right? So we're going to focus to a large extent on Rwanda today, but we're always going to be looking, even in that discussion, sort of one country to the left, one to the right. Look for examples of where countries have really made significant strides in development and ask ourselves sort of what can be learned from those countries. What are sort of the takeaways from developments there? And so the index is about facilitating the kind of discussion we're going to have today. It's facilitating debate. It's facilitating learning as well. And it's for policymakers and regulators, so the people we have on the call today. It's for exchanges, stock exchanges, securities exchanges. It's for the users and providers of capital. Those are sort of all the stakeholders that we want to get in the room here and discuss this. And as I said, it's not a single country discussion. What we're hoping to do, the reason why we're focusing on Africa on this is not just because, for example, as Absa, we're an African-focused financial institution, but because we think that there are lots of learnings that can be had here on the continent. As we think about East Africa, the experience of Rwanda in some parts of the index will be much more advanced than the experience in a Burundi or in a Uganda or in a Tanzania. There'll be other experiences where maybe there's developments in Kenya or Uganda that can be taken away as useful learnings for Rwanda. And it's not just in East Africa, in the East African community, of course. It's examples that we have across the continent. So it's not a single country discussion, and it certainly isn't an academic one. We're thinking here about practical experience being put to use in an African context. And I think that's what makes it so powerful. So if we pop to the first of the content slides here, I want to highlight that, of course, whenever there's an index, of course, there's scoring, of course, there's placing for positions, and there's going to be plenty of time for that. But I want to sort of provide a slightly longer introduction here to really contextualize things. And the first bit, I think that's really important, is no country is standing. Look through each of the countries that are participating and ask the question, sort of, what positive developments, where have financial market openness, transparency, accessibility improved in different parts across the continent? And what we can see here is that no country is standing still. On the screen in front of you right now, you've got sort of a snapshot of facing pages 10 and 11 in the PDF of the document that we'll share. But you can see across the countries, one of the big themes, one of the areas that we're seeing a lot of progress in is in ESG. So for example, carbon market was introduced in Mauritius in our most recent measurement period. There's a blue bond in Capo Verde. You have new ESG guidelines in places like Eswatini, a gender-linked bond in the corporate space in South Africa and more. And ESG is one of the areas where I think Rwanda has also generated some really positive developments over the last year or so, where, of course, you will know Rwanda being the first country to reach agreement with the IMF through the Resilience and Sustainability Trust to enhance sort of climate adaptation and mitigation. Away from ESG, we've seen new products develop. So Sukuk issuance in countries like South Africa and Tanzania, the ability to tap into all new types of financial markets. More broadly than that, or further deepening of market, where a repo market was introduced in Lesotho. The first 15-year government bond was introduced, so providing a much longer yield curve than before, providing longer-term finance, not only for the government, but setting a benchmark for corporates there. And we have examples in countries where foreign exchange markets sort of working more smoothly and better. We use Nigeria here as an example, in part, frankly, of a country that has an awful lot to do in order to improve the smooth functioning of that market, but also where some kudos needs to be recognized as well with the unification in our measurement period of some of the FX rates. As an intro to the Absa African Financial Markets Index, and we'll just pop one slide ahead, Nicole. We are excited this year, or in the 2023 version, the version that we're talking about right now, to expand the coverage to include 28 countries. So Cabo Verde and Tunisia were joined. Together with all the countries, we've got now more than 80% of the continent's population under coverage. We've got more than 80% of the region's GDP. And within that, it's really important to highlight, we haven't done that just by starting the index and including only the largest countries that are there. You will see that many of the smaller countries are in the index as well. So we have countries like Seychelles, we have countries like Cabo Verde. We have the giants, of course, Egypt, Nigeria, South Africa. We're represented across North Africa, Sub-Saharan Africa. We have the broadest set of examples so that we can provide learnings to one another as we can think of. And I must highlight here that the United Nations Economic Commission for Africa has been really instrumental in this over the last the scoring. Well, it's no simple thing, right? What does open and transparent and accessible mean when you're sitting down to score countries out of 100? Wasn't obvious to us, frankly, when we started this project back in 2016 and published in 2017. And each year, it's certainly an area for some really active discussion. But the way that we've gone about it throughout, I think is quite helpful, right? So there's a mix of quantitative and qualitative assessments. There's more than 40 indicators that are including in each country's scoring. So if any particular indicator feels perhaps a little bit rough for one country or another, rest assured that there's plenty of other indicators, assessments that help provide the overall scoring in that space. And to get the data for this, there's more than 50 organizations across the continent that help contribute in that space. And that includes securities exchanges, it includes regulators, it certainly includes central banks and finance ministries, pension fund organizations, and others. We're constantly evolving, right? So over the 7 years of the index already, the way that we measure some of being open and transparent and accessible. Over time, we've made improvements here. For example, I mentioned before that South Africa and Tanzania had introduced Islamic products into their markets. Well, the existence of Islamic products are one of the things that we've introduced in just recent years in the index. For this issue that we're talking about today, this edition of the index, we've got what we think is a more objective way of measuring capital controls, trying to move out of some of the qualitative aspects of something like that. We've removed one of the measures of capital markets effectiveness. We've tightened up some scoring in some places. But the point here, I suppose, is that the index and the way that we score it is constantly evolving, trying to get our best measure of open and transparent and accessible, and also looking to find the best way to get actionable items into the hands of policymakers and regulators so that we can contribute to this evolution of financial markets here across the continent. I want to introduce sort of a little bit more specifics about the way we score things now. So we'll move one slide forward. We call them in the Absa African Financial Markets Index, we call them pillars. You can think of them as themes. We take these sort of 40-odd measurements that we put towards a country score, and then we group them in kind of 6 broad areas. And we're going to unpack each of these with Nicole in a few minutes, so we can really understand what's driving sort of the performance of Rwanda in the index today, but also identifying sort of the most effective ways to move forward, the low-hanging fruit that can help bring about development in the country's context. So the first of the pillars that we have is around market depth. So that's in a simple way, that's about what financial products exist. It's about how large and liquid markets are, and sort of the information available around that. The second of the pillars is around the foreign exchange market. And that's about FX liquidity, the level of reserves. It's about the type of FX management that takes place. And it's also about the transparency of information, right? As a corporate looking to account looking to transact, the prices that they read about from the central bank are the prices that they can actually access foreign exchange at. The third of our themes or pillars is around market transparency, tax in the regulatory environment. And that's about things like the availability of credit ratings, not only at the sovereign level, but at the corporate level. It's about the enabling environment for ESG assets. It's around things like withholding taxes and taxation treaties between countries, smoothing sort of the ability to transfer capital across borders. The fourth of our pillars takes a bit of a different stab at the theme, and it looks specifically at the capacity of local investors through the eyes of local pension funds. And the idea there is that if we want to make our markets open and accessible and transparent for capital from all areas, well, having deep local participants in those markets, and often that's pension funds, deep local participants is one of the best ways to do that. Very difficult otherwise to think about purchasing not at all sure that on the day that you need to exit, that there'll be anybody there to pick up the other side of this. The fifth of the pillars is around the macro environment and macro transparency. So on the macro environment side of things, of course, countries that have stronger economic growth, that have inflation that's under greater control, that have budget balances and public debt that are less onerous, that have non-performing loans in the banking sector that are lower rather than higher. That's a macro environment that just makes it easier for financial markets to flourish. Also focused on transparency. Then here we're also thinking about sort of the quality and timeliness of announcements around, say, the national budget, around discussions that the policymakers at the central bank will have in setting interest rates and others. So it's really that broader macro space that we try to capture in the fifth pillar. And then the very last of our pillars is the sixth one. It's around legal standards and enforceability. That's about netting and collateral positions. It's about the use of standard global master agreements and others. We'll get into the thick of that a little bit later in this discussion. But I just wanted to highlight through these 6 broad themes how we're looking to take this really nebulous concept of what makes financial markets open and transparent and accessible and try to get it into something that we can measure and discuss and compare. In that full version of the report, it's the inside back cover that goes into more detail in each and every bit that we measure in this report. Now, of course, I've been holding back for a little bit just to talk about the scoring in the 7th edition, but I think it's time to talk about that scoring now. The top 3 in the index for this most recent release are the same as the previous year. So South Africa leading Mauritius, followed by Nigeria. It's notable, I suppose, though not a great headline, that both South Africa and Nigeria's scores actually went a little bit backwards in this most recent year. For South Africa, it's how we measure the size of pension fund assets. And there's some market setbacks, took the country backwards in that space. In Nigeria, despite some positive progress over the measurement period in sort of bringing different exchange rate markets together, Of course, 2023 was really identified by very substantial FX liquidity shortages in the Nigerian market. The top five, to round out that top five from the first three, we've got Uganda and Namibia in there as well. And Uganda in particular, your regional neighbor, is one of the standout performers of this index over the 7 years that we've been running it. Score has jumped 16 points, and taking it from back in 2017 when we first published a score that was actually a little bit behind where Rwanda was, into the top five for Uganda. And really, it's only Seychelles of all the countries in the index that have made more improvements than Uganda over the last 7 years. But I want to highlight that this is less about sort of thinking about the index results as a medals table, right? It'd be lovely to come first or second or third, but it's about looking at the results, identifying those countries that are moving, asking the questions, positive questions, what's helping countries improve the openness and transparency and accessibility in those markets, asking similar, more difficult questions, I suppose, when we see countries move in the wrong way, and then looking across the detail of the findings to find those countries that have sort of positive learnings or examples for someplace like Rwanda, so that those markets can be developed, that the support can be given, and progress can be made. What we saw in 2023, it's been a very difficult global environment, right? But even then, 15 of the 28 countries in the index managed to improve their scores. So even in a difficult environment, it wasn't impossible, but certainly made harder. We saw that reflected in market caps as global interest rates sort of placed pressure on sort of valuations, local valuations, around FX reserves, and just the macro environment, right? Economic growth has been harder, debt is higher, NPLs in a lot of countries have been moving in the wrong direction. Even in that difficult global environment, if we think about those areas of the index where policymakers and regulators can make a direct difference, there's certainly evidence that in actions, positive actions are taking place each and every year. Recall that we highlighted some of those back on the first or second content slide of today's talk. For Rwanda itself, so the score in this most recent edition of the index is 44, right? That places Rwanda 17th overall. And it's in a very dense part of the scoring. So the difference between 14th and 20th place, for example, is just 3 points. So if we're interested in moving ahead by one country or two, really small developments can take that. Remember, what we're trying to gain from here is a discussion and learning and a program going forward, not to move one country forward or back, but to really make these markets work better, to provide space for local and foreign capital to really be put to work. And so with that in mind, there's some interesting comparisons that we can highlight even now before we go into the detail of the pillars. You'll see that Malawi is in 13th place, about 5 points higher than where Rwanda is. And that's largely thanks to developments in Malawi around the 6th pillar, which is around netting and collateral and global standard master agreements. You see Eswatini, so another sort of small regional peer, right, in 14th place. So again, scoring somewhat higher than Rwanda, 2 points higher. And there they have largely made their gap to Rwanda on having a somewhat more developed. Those that we can tease out from this sort of presentation. The next two slides that we have here just sort of provide a little bit more context of that overall score. But then I think we're going to want to go into the detail. So, Nikhail, if we just pop one page further forward. In that space, the graphic looks a little bit complicated, but effectively green is good. Sort of the pink and red is less good. Countries in green are countries that have seen over their time in the index scores improve. Countries in red have seen scores go a little bit backwards. And certainly that's what we've seen reflected in Rwanda, at least. Remember that over time, many countries are making progress here. So often just to stand still, positive developments need to take place. But Rwanda score, as we'll see on the next page, had peaked back in 2019 when the country was 9th overall in the index. And since then, we've fallen back a little bit. And I think it's probably that part of the discussion, right? It's really getting into various themes and pillars for the most use for the audience today. And with that, let me hand over to Nicole from OMFIF to talk through the detailed pillars and Rwanda's performance in each of those. But from my side, thank you very much.
Thank you, Jeff, for a comprehensive overview of the project as a whole and Rwanda's score up until this point, where, as we see, it scores 44 and in 17th place. I'll be going over Rwanda's performance in more detail in each of the 6 pillars that Jeff mentioned earlier today. So starting with pillar 1, market depth, where if you recall what Jeff mentioned before, this is where we look at indicators like the size and liquidity of the local securities exchange, as well as some of the fundamental aspects that underpin some of the market developments, the existence of primary dealers or secondary market makers, for example. Here, generally speaking, just looking at the scores for each of the 28 countries that are in the index, the 2023 score is in the orange bars, and the brown circles represent the score from the year before in 2022. Generally speaking, for 16 of the countries, scores fell in the past year. That was linked to, again, as Jeff mentioned before, some of the difficult global conditions with the tightening of global financial conditions around issues like rising global interest rates, for example, the backdrop of high commodity prices as well, and general outflows from emerging markets, which many African countries were not immune from. And that weighed on the size and liquidity of local exchanges. And that's particularly the case in dollar terms, as we use, we put all these markets in common currency terms to assess them. And there has been a deterioration on that front. Rwanda's score, as you can see in the blue shaded area, it scores 31, almost the same as it did a year before. Actually, it increased very slightly from 30 to 31, and it ranks in 16th place. Looking in more detail at the breakdown of Rwanda's score by each of the sub indicators that compose pillar 1, you can see that it scores at the top in the light orange, only 1 point for the primary dealer system. The lack of primary market dealers means it scores less than most other countries on that measure, but there is reasonable market depth and other fundamentals in place. For example, the securities exchange has closing auctions for fair market prices, which some other African countries do not have, which is why the dark orange bars are scores highly. Looking further down, it scores 7 points for the product diversity, which is around the middle of the range. Generally speaking, on a local exchange, there are a decent range of different financial market products, ranging from not just equities and some of the more common fixed income products, but also mutual funds and REITs as well. Having said that, one area where it is relatively limited is having different currencies, assets in different currencies available on the local market, as well as different hedging products. That's an area which could be improved. But also more significantly is that compared to some other African countries, the size and the liquidity in the local markets is relatively weak, scoring 3 points for liquidity and just 6 points on the size of the domestic markets. That being said, there were some improvements over the past year. So taking the total bond market turnover on just the local exchange, so both for government bonds and corporate bonds, it rose to 10.5%, the turnover as a share of total bonds outstanding, which is double what it was a year before at 5.1%. So there has been some improvement in liquidity in fixed income markets. However, in relative terms, it's still weaker than most others.
So they can't hear a microphone.
What's more, in terms of the equity market capitalization, it's 25% of GDP, or at least it was a year ago. And that's slightly less than the average for all countries in the AFME index, which was 28%. So taking this index as a whole, there are some clear areas of improvement, particularly in terms of the corporate bond market, which is the area which weighs it down in terms of the size and liquidity. That's still an area which is relatively small and liquid. There is a lack of primary market dealers, as well as secondary market makers, which could help build the fundamentals and support the liquidity in the domestic exchange. And in terms of some of the areas where it could improve in its financial product diversity, as we'll come on to, there's been some great improvements in the ESG space, and it seems like that's an area where Rwanda can continue to progress, perhaps with the issuance of domestically listed ESG products like green bonds, social bonds, etc. Moving on to Pillar 2 and the access to foreign exchange. This is similar to what we showed in Pillar 1, where the orange bars show the score for 2023, the brown circles show the score for 2022. And again, there was a general deterioration in scores across the index when we looked at it last year. 17 of the 28 countries saw their scores fall rather than rise. Again, much of this was linked to the difficult global conditions, capital outflows from emerging markets, and a strong dollar environment, leading to a deterioration in foreign currency reserves coverage. In terms of months of imports, we found that 21 of the 28 countries suffered a deterioration. Rwanda was one of those countries. They're saying that it ranks within the top 10 within this pillar with a score of 59. So again, looking in a bit more detail as to what compile the subsections to this pillar. In terms of the reporting standards and the FX arrangement and controls, Rwanda scores relatively high on this front. It scores a perfect score for its reporting standards, where it's very easy to access the live exchange rates for Rwanda. It also has a flexible currency, unlike some others in the region, and has relatively few capital controls. So it scores well for that part of the pillar. Having said that, there are, again, areas to improve here. The interbank FX market is relatively limited. And actually took a quote from one of the survey participants we received last year, which mentioned that transactions in the FX market are very few or none sometimes. So that's an area where Rwanda only scores 3 points for that part of the pillar. And as mentioned, there was a deterioration in FX reserves adequacy across the continent, and Rwanda was one such case. We're looking at it in terms of months of imports in 2022, which is the period that we looked at for last year's index. Reserves coverage was 3.7 months of imports, which was down from 4.4 in 2021. That led to a fall in its reserve coverage score from 16 to 14 over the past year. That's the dark gray portion at the bottom of those bars. But again, this was a common theme across the continent. Coverage also fell in 20 other countries in the index. In terms of areas for improvement, I mean, not just in terms of perhaps bolstering its FX reserves, although looking at the latest figures, it seems like that has stabilized in the past year. There are other areas which can be improved upon. So bolstering some of the FX liquidity in the banking system would help improve that pink score there, which is just 3 right now in terms of FX liquidity. And to really enhance the transparency of the FX market, encouraging the adoption of the FX Global Code would support the scores here. These are best practice principles to ensure a transparent FX market, which can help to underpin greater confidence for market participants. This is something that, for example, one of Rwanda's peer countries in Kenya has the central bank formally adopted the FX Global Code and put it in its own standards last year. So it suggests that this is something that is the focus of some other countries in East Africa. Moving on to Pillar 3, this looks at market transparency, tax, and regulatory environments. In many ways, this is the backbone of financial markets by looking at the regulation and some of the clear elements of reporting and standards for those measures. As mentioned by Jeff earlier on, since 2021, we've incorporated indicators relating to sustainability in this pillar, as it's become increasingly important for global financial markets and for countries to attract a new pool of capital. So that includes factors like the existence of ESG market standards, incentives for issuing ESG assets, as well as introducing climate-related financial regulation to bolster the overall regulatory oversight. In the past year, this is an area where countries across the index improved their score by 18 of the countries did so. In only 7 of the countries were there falls, and this is because there's been widespread developments in introducing new ESG standards, as well as having higher credit ratings, which helps for transparency, and I'll come on to that in a second. But this was a pillar where Rwanda performs highest. It scored 79 points, which is higher than it did for any other pillar. This is up from 71 a year ago. And it ranks in 10th position, which again was relatively strong, being in the top 10. So again, looking at the breakdown here and starting from the top, this is where we look at the existence of credit ratings, primarily by the international ratings agencies for Fitch, Moody's, and S&P. Rwanda on this front does well. It has international credit sovereign ratings from all 3 of those organizations, which helps to provide transparency for investors over the creditworthiness of the government. Having said that, on the corporate side, there's relatively few corporate credit ratings, which is why its score isn't higher for that portion of the pillar. But where we did see progress, looking at that second pillar in the brown section, where its score increased from 10 to 18, was for ESG initiatives and standards. There are a few areas where Rwanda is really starting to become at the forefront of Africa for this. So there's the Ireme Invest program, which is looking to scale up private sector green investments in Rwanda. And as mentioned before, Rwanda was the first African country to agree in an IMF deal under the Resilience and Sustainability Facility, which is looking to help to bolster climate-related financing for adaptation and mitigation of climate-related risks. So this is an area where which has bolstered Rwanda's score, not just in Pillar 3, but for the index as a whole. Otherwise, Rwanda is one of the among the highest scorers for the financial information transparency in its accounting standards. For example, there are IFRS standards that are required for all companies to report on, which is an area where it does relatively well. So in terms of areas for improvement, one area which could bolster the financial regulatory environment, as well as progressing on these ESG initiatives and standards, is to introduce climate-related stress testing into financial stability regulations. Again, this is something that is done in a handful of African countries over the past year. In Kenya and Zimbabwe, for example, they've introduced regulation for the banking sector to report on climate-related risks. This has gone even further in other countries like Morocco. One other area, as mentioned, which could help to bolster the score here, is to have a higher number of corporate credit ratings, although in many ways that's indicative of the relatively small corporate market in Rwanda. Moving on to Pillar 4 and the capacity of local investors. Again, as Jeff alluded to earlier, this is where we primarily center our analysis on the size of the pension fund market to try and bolster the available pool of domestic capital to deploy in local markets. Here, there was a general mix of scores, but over the past year or so, scores generally fell rather than rise. Again, that was linked to some of the sell-off in global markets, which hit the size of domestic pension assets too, particularly in dollar terms. For Rwanda, this is where it scores relatively poorly. It's at a score of 13. It's worth saying there are a number of other countries across the region which also score similarly poorly. So you can see Uganda, for example, right next to Rwanda, also scores around 13 or 14 points. Whereas those, particularly towards the south of Africa, Southern Africa, tend to score pretty well on this index, like Namibia, South Africa. This is indicative of the diverging outcomes in terms of the size of domestic pension markets. So again, digging deeper, there are two main components of this pillar. One of them is not just the pension fund size, which I'll come on to in a second, but we also look at it relative to market capitalization and weighting that by the liquidity of local markets. So this is in essence trying to give us a proxy of whether pension funds firstly help to underpin the size of domestic markets by having some form of allocation towards domestic securities, but also to see if they help to foster some of the trading in local markets as well, which is why we weight it by liquidity, so that we can reward countries where pension funds engage in some of that domestic trading to underpin market liquidity, rather than simply buy and hold assets. That's one area where the score for Rwanda weakened very slightly from 8 to 7 points. But one of the bigger, more fundamental reasons is that the size of the domestic pension market is relatively small. In per capita terms, it edged down to $91 per capita from $93 per capita a year before, which is why its score edged down very slightly. But in the general context, that is also weaker than most AFME countries. The median for the index as a whole was $107 per capita. But there are some countries like Namibia where that's in the thousands, for example. So that suggests there's a long way to go. One other thing we look at in this pillar, although it doesn't directly feed into the scores, are different financial inclusion initiatives to try and support local investors to invest in the local exchange. So some of the measures we look at are, some of the initiatives we look at are whether there are mobile trading apps to help to foster retail investors to interact more in local markets. One key area which we look at, which is where there seems to be some progress in Rwanda, are around financial education and financial literacy programs. So here, one of the survey participants mentioned to us that there's a national financial education roadmap, which is aiming to bolster financial inclusion in the country, which would, over time, hopefully help to support the development of local capital markets, because, again, as Jeff mentioned before, it's not just a case of trying to attract international capital, but one of the key things we focus on is trying to build up that base of domestic savings and domestic capital to bolster the overall financial market development in African countries. But as mentioned, one of the key areas for improvement in this pillar specifically is on developing the overall size of the pension market, which is still below the AFME median at this stage. Moving on to pillar 5, which is looking at the domestic macroeconomic environment, but also just as importantly, the transparency around some of the key macroeconomic policies and data. This is one where Rwanda scores increased, and there was generally a mixed performance across the index here. 16 countries saw their scores rise, 10 saw them fall. And I'll come on to in a second where Rwanda's made some improvements. But generally speaking, the macroeconomic backdrop had stabilized last year for most countries, compared to in 2022, where we saw significant volatility from the surge in commodity prices following the Russia-Ukraine war, as well as the start of the tightening cycles and tightening of global financial conditions in 2022, which again has started to stabilize. In absolute terms, Rwanda scores relatively well here, scoring 74 points, which was up from 70. Although in relative terms, it's sort of middle of the pack here in 14th place, as many other countries in the index also fare well on their macroeconomic environment. So again, digging a bit deeper, one area where Rwanda scores relatively well, looking at the top there, is on the transparency around its budget releases. Every year when the budget is announced, it's made widely accessible to market participants and those interested in the country. Having said that, for the central bank and its MPC decisions, this is an area where Rwanda is slightly less predictable or transparent than some other countries, where the calendar of MPC meetings, we look at whether there's a calendar established at the start of the year as to how many meetings there are and what dates there are, which can provide market participants with some certainty and predictability around when decisions are made. That's one area which isn't quite the case with the National Bank of Rwanda. Having said that, there are areas where there has been some significant improvement in the past year. So the decline in the external debt ratio, which fell to 51.5% of GDP from 53.4% a year before, is one key reason why the Rwanda score rises when we looked at it last year. You can see that external debt portion in orange rose from 2 points in 2022 to 6 points last year. There was also an improvement in the state of the banking sector, where we look at the share of non-performing loans to gross loans, which fell to 4.1% from 4.6% a year before. And that for that portion of the score increased from 11 to 12 points over the past year. However, one key area where Rwanda score regressed in this pillar was on inflation. Again, we looked at this where things were a year ago, and of course, Rwanda's inflation was in the high double digits at that point, which is why its score had deteriorated, particularly compared to where it was in 2021, for example, where the pink portion of that bar was at 14 when inflation was a lot more stable. Of course, inflation has since stabilized since we looked at these measures a year ago, so that's probably one area where Rwanda score will improve for this year's index. And more generally, it's one of the strongest performers when we look at its GDP growth. We look at both the historical growth outturns, so the average for the past 5 years, but also the forecast for the next 5 years, based on some of the IMF's predictions and forecasts, where on both sides of it, both the historical outturn, but also the future expected growth, it's at above 6%, which is one of the strongest in the index and in Africa as a whole, which is one area which can hopefully support the investment into Rwanda, given that it has a reasonable macroeconomic backdrop. So in terms of areas for improvement, again, as mentioned before, a regular schedule of monetary policy committee meetings would help to support both local and international investors to know when some of the key decisions are being made. External debt, while it's coming down, is still relatively high, and the AFME average is 37.5%, at least for last year. So Rwanda is above average on that front. And as mentioned, the double-digit inflation weighed on its score a year ago, although that has since stabilized. Coming on to the last pillar, which is pillar 6, in terms of legal standards and enforceability. Now, this primarily centers on the use of standard master agreements. So that's ISDA, JIMRA, and JIMSLA. These agreements can help to mitigate against counterparty risk, which in turn can promote a higher volume of transactions if the legal framework underpinning securities and derivative markets are more secure. It's worth mentioning that we tweaked the methodology slightly a year ago, where we've started to now consider international standards more specifically. So that's where we look at whether there are clean netting opinions from international trade bodies, which beforehand we inferred this from the use of more qualitative insights. We also look at the signatories to IOSCO, which I'll come on to in a second. Rwanda here is one of the lowest scorers at 10. Again, it's not the only one which scores relatively poorly on this measure, whereas again, there's a big range of outcomes here, where some others score 50 and above, and for Mauritius and South Africa, they score 100, because not only do they have some of these legal frameworks in place, but they are recognized by international bodies. So looking here more specifically at some of the details, on the international standards, Rwanda scores relatively poorly here, in the sense that it's one of the only 11 AFME countries without a signatory to IOSCO. This is a benchmark. IOSCO's Memorandum of Understanding is a benchmark for international cooperation and transparency within securities and derivatives law. So this, again, signatories to this agreement can help to foster more transparency, and again, being an international standard can help to underpin confidence in Rwanda's markets. It's worth mentioning that we didn't look at this IOSCO measure in 2021. We looked at more survey-based measures, which is why the 2021 score was slightly higher then. Otherwise, there are lack of enforceable closeout netting and collateral provisions in domestic legislation, which is why, again, Rwanda scores relatively poorly on those other measures of collateral positions and netting position enforceability. Having said that, though, from some of the surveys we received from the local market participants, but also we corroborate some of these developments with some of the international trade bodies, like with ISDA, the UN ECA, as well as Frontclear. And from those discussions and analysis, we found out that the central bank is very clearly working with IFC and Frontclear to review and improve the regulatory framework. So there are plans in place to support the adoption of standard master agreements, such as mentioned before, ISDA, GIMRA, and GIMSLA, which, if enacted, would help bolster Rwanda's score in this pillar. So in terms of areas for improvement, well, as mentioned before, that it would be getting these legal amendments through to support the use of these standard master agreements. And then once that is achieved, the next step from that would be to try and achieve clean opinions from international bodies like ISDA, ICMA, and ISLA, which would provide reassurance to domestic and international market participants over the regulatory standards in Rwanda, as well as being a signatory to IOSCO, as mentioned before. So that concludes the presentation from both Jeff and myself. Just as some high-level findings then on Rwanda's performance across the index and each of the pillars. The general high-level point is that Rwanda scores well on its macroeconomic environment. As mentioned before, it's one of the strongest in terms of its growth prospects, and external debt and non-performing loans is coming down, so that is getting more robust as well. And the regulatory backdrop, which we saw in Pillar 3, particularly with new initiatives around ESG, is improving as well. Having said that, there is some work to be done to bolster its score going forward around these indicators in Pillar 6, around the legal frameworks and enforceability, around improving the size of the pension market, which we saw in Pillar 4, and promoting liquidity in the securities market more generally, which we saw in Pillar 1. I would encourage you all, if you would like more details of the report as a whole, which shows the scores of all countries. You can download the report. It's available on Absa's website. It's also available on the OMFIF website too. But otherwise, very happy to take any questions that the audience might have on the index or anything you've heard today. Yeah, with that, I'll hand back. Thank you.
And we can see, Nikhail, in the chat, a request to share the PowerPoint, and I'm certain we can pop that on the chat right away.
Happy to do so, yeah.
Thank you, Nikhil and Jeff, for your great presentation. Now the floor is open to all our participants. Those who want to ask a question, feel free to raise your hand, as we still have almost 10 minutes, so that we can welcome our guest of honor for the closing remarks. If you have a question, a comment, feel free to unmute yourself and share with us.
Yeah, just a quick question to Nikki. Yes, this is Jean-Marie from the Central Bank. Thank you for the presentation. I have just a quick question on, I think it was Pillar 2, where you mentioned that there is a very few capital restriction. How did you come to that conclusion? Because our capital account is fully liberalized for, for over 30 years now, almost. How did you come to that conclusion? Thank you.
Yeah, so actually, so this is one area where Rwanda scores higher than most countries in terms of the liberalization of its capital controls. So actually, it almost scores a perfect score on that specific measure. And the way we look at it is we consult the IMF's, I need to get the exact name of this right, the ARIA database. So this is an annual report that it publishes, which goes into a lot of detail on the flexibility of the capital market and capital controls more generally. So we look at, there are 12 measures of capital restrictions. So this is things like repatriation requirements, controls on derivatives internationally, and controls on FDI and things like that. And so we count the number of restrictions that there are on capital transactions based on the IMF's definitions. And actually, Rwanda is one of the only countries where there are no restrictions on any of these 12. So it does very well on that part of the index.
Thank you, Nikhil. I have seen Honorable Deputy Governor has raised the hand. Welcome, Deputy Governor.
Thank you very much. I have my colleague, the Executive Director for Operations, Chantal, who had a question.
Thank you very much, and thank you for the good presentation. So now at least to understand the way you are still having gaps. So I have two questions. Question number one is on pillar number 4 about the pension fund per capita. I wanted to understand if we only consider the public pension funds, because here having other private schemes. So if we could also consider them, maybe the score can improve. So another question is about the feedback. I wanted to understand when contributors or countries receive back the report, is there an opportunity to review the reports before the reports get out? Thank you.
Thank you, and thanks, Nikhil. And Jeff, probably a question I had was noted as something we can improve on the MPC meetings calendar, because actually the quarterly calendar is available, but I was wondering whether you want a specific date or precise date of which MPC, if is that what's needed to sort of increase the score. Thank you.
Yeah, I'm happy to take that. So in terms of the first question on the size of the pension fund, so we would encourage looking at both sides, and this is one where we often consult with, well, sometimes the OECD has some of the data for it for African countries. Otherwise, we'll resort to survey measures or perhaps some of the documents that are produced by some of the regulators, for example. But the figure that we took was looking at the Rwanda Social Security Board and the mandatory pension scheme, where that's the overall pension size that we saw, which is, again, this was actually taken from one of the survey measures which mentioned what the total size of the assets were on that front. And so that's the figure that we used. Coming back to what the Deputy Governor asked in terms of the schedule of meetings. So what we do look for is, that is correct, that we would look at the specific date and the calendar there, so that, again, so this is something that many other central banks in the region, on the continent, do to give market participants and investors and others interested in Rwanda's economy and markets, to give them a heads up. And so there's some greater predictability and transparency around some of the policy decisions. So yeah, noted that it's produced on a quarterly basis, but the measure we look for are the specific dates.
And I suppose the third point that was asked, Nicole, was just around the ability, I guess, to get a preview of the document before it publishes. And I suppose part of our answer there is around, gosh, we encourage the best possible quality inputs. And so we always want to make sure that we're reaching out to the right people at the central bank, the right people at Treasury, in order to ensure that first time we get the best possible information. Does that sound about right, Nicole?
Yeah, so so again, we try and be as robust as we can. So we at OMFIF would do over 50 surveys of organizations across Africa, and I think including the National Bank of Rwanda, the Capital Markets Authority, and I think the Securities Exchange this year is submitted as well. So we'll take some of the data that comes from that, as well as supporting it with some of these other databases, like mentioned from the IMF or others, to try and ensure that we have the best available quality data. If there are questions, we often go back and ask the participants if we spot an irregularity or something that has changed. So we often do go back for confirmations. But yeah, ultimately we have our sort of internal measures to make sure that we have the best possible data collection process. But then by all means, we're as we're doing today, we're very happy then to present the data and engage with the policymakers and market participants to dig into more details about the performance for Rwanda and other countries. So we definitely encourage that that collaboration and that cooperation on these measures. Although I think unfortunately we don't have the time to engage with every single country ahead of the index being published.
Thank you,
Yeah.
Nikhil. Thank you, and Jeff.
Hello.
James. Huh?
Hello.
Agnes.
Can I come in? Or?
Can I ask?
Dr. James Ndahiro, welcome.
Thank you. I just wanted to ask two questions. One, can you please share with us some hedging instruments that you referred to, particularly in the emerging markets on our continent? If that experience probably can be shared across. Two, the issue of multi-currency listings. Have you looked at their macroeconomic implications, and in the markets that have those, can you please share with us the status pertaining to that today? Thank you.
Yeah, I can take that. So there's a few types of hedging products that we look at. So those are cross-currency hedging products, which is one that Rwanda has got. Some of the others that we look at are interest rate swaps in local currency terms, which is one that a handful of other African countries have, as well as interest rate cap collars as well. So there's we also have an option to put any other hedging products that are available, which some countries do have and some don't. So things like forward rate agreements or single stock futures and other such hedging products. In terms of the currencies available, again, there's a mix here. So some of those that do seem to do well are countries like Mauritius, where they have various different products available for under different currencies, like under euros, pounds, and rand. So that's something that they can use to try and attract international capital. And they have a relatively stable macro backdrop. I think Botswana has, Seychelles, sorry, is another country, as well as South Africa. So there are a handful of countries. Again, that's one of the areas which isn't as common as some of the other areas in Pillar 1, but there are a handful of countries which do have multiple hedging products and multiple currencies too.
Thank you, Nikhil. Can we have the last question from Agnes so that we can keep our time? Agnes.
Sure. I'm Agnes, the CEO of BCP Investment Managers. Mine goes to the type of application Nikhil said. He said there are type of application that are available, good application that can help attract investors. Another one is to give a detailed and comprehensive report on this. Thank you very much.
So to clarify, was that alluding to what I mentioned towards the end of the presentation in Pillar 6 with the standard master agreements?
Yes.
Yep. So the three we look at are ISDA agreements, are on sorry, let me get the full ones up, on GIMRA and GIMSLA. So these are all three similar but sufficiently different contracts, which can underpin domestic legislation, particularly around derivatives markets, as well as securities markets more generally, to try and foster better and clearer standards, so that if there is an event of a default, there are already contracts in place to clearly say when some of the assets can be netted off, for example, or if there's available collateral in the event of a default or an incident or an insolvency incident. So having these contracts in place can help to mitigate against counterparty risk by making it clear ahead of time what some of those netting provisions would be, or possibly the collateral provisions, what they would be. And hopefully having those provisions in place can help to foster greater market transactions, because the legal framework around securities and derivatives would already be in place ahead of time, rather than if there is an event of a default and a protracted legal battle over some of these provisions, can sometimes deter transactions in the first place.
I also have a quick one, Nikhil. Yes. Well, you requested that the central bank, treasury be a part of the. But yes, we, myself in the financial market, have been responsible for coordinating, and filling up the questionnaire since 2017, and I think going forward we have coordinated with the Capital Market Authority, who will be now in charge of coordinating the activities that were performed by the central bank, but it will be on collective effort. Another thing I wanted to know, for this particular questionnaire that we filled, that I hope you've received by now,
yes.
We indicated that we have worked on the these legal standards. We amended one of the legal instruments to include the provision of closeout netting, so that GMRIs and GMSLA can be enforced in Iran. Would that change anything? Because now it's pending parliamentary approval, so it's going to go through the process of being enacted and so forth. Our target is by the end of this year. So will that change anything at all?
Yeah. So I think as soon as it is, and hopefully it is put into domestic legislation, at that point it would filter into the Pillar 6 score. But it's useful to know that context, that it is now gone through some of that process and is with the Parliament now, and that's something we can. What we often do in the report is not just focus on the scores, but some of the underlying developments. So you'll have seen in last year's report, we alluded to the fact that Rwanda is working on this amendment with IFC and Frontclear. So that's probably something we'll mention again in this year's reports, that it's getting ever closer to putting that into domestic legislation. And perhaps if it is at the end of the year in which that happens, then that will be reflected in the scores next year rather than this year.
Okay, perfect. Thank you.
Thank you, Nikhil. Let's welcome our guest of honor, Honorable Soraya Kuzarimi, the Deputy Governor at the Central Bank. Welcome, Honorable.
Thank you very much, and thank you, Nikhil and Jeff, again for an insightful presentation. I think all participants in the capital market, but the development of our capital market are here, and I wanted to thank CEO Tapelo for organizing this. And really, we are very grateful at the National Bank of Rwanda, which is Rwanda Central Bank, but also the issuer of government debt instruments, to be part of this presentation. And really, I think we've all had more, I think, perspectives on how the Absa Financial Index is computed. And probably we might request separate sessions on specific technical matters that we want to go through with you, so that we can not only improve our score, but make sure that we have a more vibrant capital market, being the bond market, but also equity market. And it is also crystal clear that collaboration between the two financial sector regulators, the Capital Markets Authority and the National Bank, is paramount in terms of not only developing our capital market, but also making sure that all the developments and progress made are reflected in the index, but also to give confidence to investors on the attractivity of our market, on its transparency as well, and accessibility, as you mentioned, as weighted. And I think what also I need to take away is that it's probably a long journey, but we're grateful that you showed us as well what the quick wins could be for Rwanda's capital market to improve and be more attractive, which we will work on, being on the legal side, as my colleagues mentioned, but also in strengthening capacity of the local investors, and also the fact that these initiatives in financial inclusion, financial literacy are also recognized. Lastly, I think there was an emphasis on innovations that we have seen in our markets, which have contributed to some of the high scores that we have, being on having ESG standards on our market. And I'm also happy to report, which probably will be reflected in this year's index, that the National Bank of Rwanda also issued guidelines to the financial sector on reporting and disclosure of climate-related risks, and that was done in November. So I'm hoping that will be reflected in this year's index as well. So I will not take long. I think we're past time, but really wanted to thank you again, Nikhil and Jeff, and thank OMFIF and Absa Group through you for taking the time to really go through the index, the Africa Financial Index, which I must admit had not been probably in our radar, but thanks to Tapelo's joining us as CEO of Capital Markets Authority, it's something that's going to be a priority, not only for us, but we relay, and I'm hoping that we also have representatives of the Ministry of Finance, so that at policy level we get all the support as well to make sure that we are aligned and continue to increase visibility, efficiency, and transparency of our capital market, but also raise its size and capacity of all players. And ultimately, this really will impact not only our economic development as a country, but also access to long-term finance for our private sector as well. So it's really, I think, in any case, a win situation for all of us to make sure that we can start acting on some of these areas of improvement and continue to, I'm hoping, engage with you further on probably best practices that we can learn from, and how we continue to engage on a regular basis to update you on developments. So once again, thank you very much, and I wish everyone a very good day. Thank you.
Thank you so much, Honorable Deputy Governor. So with that, we are coming to an end of our today's conversation. Thank you to our great speakers. Thank you to everyone who attended. And I wanted to inform you that at CMA, we'll be organizing this kind of conversation on a monthly basis. So thank you so much for your time. Bye.
Thank you.
Thank you all. Bye.
Thank you very much.
Thank you all.
Yeah.